Welcome to Weekly View on Markets. Last week in Weekly View, I had discussed that the market is likely to continue the positive momentum. So this week, Nifty closed with a gain of 1.73% and closed at 17,698. Bank Nifty outperformed the market with a gain of 2.96%. Mid cap index gained 1.81% and small cap index gained 1.11% during this week. The broader markets also performed with positive bias. So, the market traded in a range of about 250 to 300 points during this week. This positive momentum is likely to continue in the coming week as well. The InterVix, that is the volatility index, has come down by about 6.98% during this week and is at 17.6%. Even 17.6% is slightly at higher level. So the higher volatility level is likely to continue in the coming week as well. As per the sectors, metal sector rallied, led the rally during this week with about 4.6% gain, followed by private sector banks with 3.58% gain. Financial services companies posted about 3% gain, which was lagging the market. The laggards in the market were IT sector companies, pharma companies, FMCG, and media companies. They dragged the market with about 1 to 2% cut during this week. Now let us look at Nifty chart. What is going to happen in the coming week? Now last week I had drawn the resistance here. That was about 16,800. So that has been crossed. After that, market started a consolidation and traded in a narrow range. Now, what is likely to happen in the next week? The positive momentum is likely to continue, and the next resistance for the market is at around 17,800 level. So, market, if you see from here, that is February, the market corrected from 17,800. So this level will be psychologically a big resistance for the market. And support we can see is at around 17,400 level. So market is ultimately likely to take out 17,800 level and move higher. It may happen next week or it may take some more time. But the market trades with a positive bias. Now this is the season of 75th year of independence for our country, and we are going to celebrate Independence Day tomorrow. So let us look at the Nifty chart, the weekly chart. The Nifty weekly chart has also formed a flag, so indicating our Independence Day tomorrow. This a flag has significant indication for Nifty moves in the coming months. So what this says, this is a flag as per the classical technical theory. This up flag has got a target of 18,600. But this 18,600 may not come immediately. It may take about 4 to 5 months for this because this is a weekly chart, which is a long term view. So, based on fundamentals, I had been discussing during earlier my weekly views that second half of this year will be good for markets, and market by the end of this year is likely to touch new all-time high. 18,600 was the previous high. Now chart is also confirming or giving me an indication that next 4 to 5 months, that is by the end of December, we may see market making a new high. So this is about the Nifty chart. Now, why I am saying this with so much of confidence? Because there is a support from the broader markets as well. Let us look at Nifty mid cap chart. This is again a weekly chart of Nifty mid cap index. This, from COVID lows, it has given a strong rally till February last year. After that, we have seen a correction. This entire correction looks like a downward trending channel. Now, if this mid cap index has broken above this channel, which has got a positive indication for mid cap index, and fundamentally, a lot of mid cap companies have posted very good results, and they have also shown good growth in their sales and profits. So the chart structure also is indicating the strength in the mid cap companies. So, of course, this is on a long term chart. It is a weekly chart, but the mid cap index is poised for much faster growth in the coming months. Now, let us look at small cap index. The small cap index posted a high of 12,000 and then the correction started. It corrected to 8,000 levels. From 8,000 levels, it has rallied over about 9,200, about 1,000 points. And it has got a lot of catch up to do. So my view is that in coming months, good small cap stocks have got a lot of scopes to go much higher because the small cap index will do a catch up rally in the coming months. So fundamentally, strong small cap stocks which are available at a reasonable price and valuation at present will give a very good returns in next 1 to 2 years time. This is about the charts. Now let us look at some of the fundamentals of the market. The IIP figures in integrated industrial production figures for the month of June has come last week. Is on Friday this weekend. It has come at 12.3, and May the same figure was IIP figure was 19.6. So it is slightly come down, but nothing to get worried on that because after the start of the monsoon, some of the construction activities like travel as and tourism sector they slowed down. It may be the impact of those kind of things. But high frequency indicators like energy consumption, then especially diesel consumption, petroleum product consumption have crossed pre-COVID levels, which indicate that which indicate that positive momentum and industrial activity is likely to continue. Another good thing for the markets is the CPI index, Consumer Price Index, for the month of July has come at 6.71, which was 7.01 during the month of June. So I had been discussing in the earlier weeks that inflation has peaked out and it is likely to moderate and come down. So this is shown in the CPI Consumer Price Index figures. So inflation has started coming down, and in future, the food inflation due to good monsoon is likely to further come down, which will have positive impact on inflation. As the inflation comes down, it is good for the economy and good for the stock market. So, with all these things, uh, I my view is that markets will go higher in the coming months. Maybe there will be small corrections. One need not to get worried about small corrections. It will be a buying opportunity. So we all should invest wisely to attain our financial freedom. So happy Independence Day, all of you, to all of you, and see you next week again. Thank you.